dollar topping, gold popping. Great entree for Sarid Harper. Sarid, I see you. I'm going to make you the presenter, and you'll be able to take control of the screen. And looking forward to meeting you and hearing your voice. Welcome to F.A.C.E. How are you today, buddy?
I'm good. How are things?
Great. Very nice meeting you. I'm glad I reached out on Twitter and invited you to our community, Sarid. So looking forward to hearing your story and the way you look at markets. I'd like to start at, how did it start for you? How did you end up as a trader using support, resistance, supply, demand? Get back in your time machine and tell us about your journey. How did it start?
Well, I've been trading kind of is a secondary thing from where it was initially. I've been working with computer viruses and computer hacking and stuff like that, computer security, since about 1999. And so that was kind of.
I'll just tell you that we're seeing a blank blue screen if you wanted to show anything else.
I'll bring a chart on so you got something pretty to look at.
Yeah, there you go. Okay. Oh, nice work. Okay, go ahead.
Yeah, so I mean, I got into trading via security work because, I mean, I think 90% of our customers were banks, and so I spent the majority of my time, and I still spend a lot of my time today doing security assessments for some of the biggest banks in the world, and primarily kind of core business software, so hedging, F.A.C.E, liquidity distribution, stuff like that. And so I was able to look into this big black box on the sell side, which I found to be really exciting. And I first was introduced to currency trading when I had to trade a commodities and FX trading platform for one of the major market makers here in Europe, and so I had to sit one of the traders who explained to me how you trade and what a limit order is and a stop order and stuff like this, and I had no idea. And I was kind of walking through the application, looking at the application via a security perspective, but I found myself paying more attention to the constantly changing numbers on the screen, and I thought it was absolutely fascinating.
Best video game in the universe, huh?
Totally, absolutely. Dollars going up and down, and yen, and this and that, and I thought, wow, this is amazing. So I mean, pretty quickly thereafter, started to apply my knowledge within computer science, which is what I studied, to the currency trading markets. And so I started to write software, and I started doing that back in about 2010, which is when I opened the doors of Hypnotic.
What a great handle, because it sounds like it was hypnotic to you.
Exactly.
When you first looked at it, that's what I was gathering. So hypnotic, a real good, catchy handle.
Yeah, it is. I thought
people are hypnotized by the screen.
Absolutely. Indeed.
Sometimes it's hard. In fact, last night it was still 8 o'clock, and I was still looking at it. My day started at 3:30. I'm not saying I sat in my chair all day, but even in the evening, I'll come in and check out Asia. So it is. It's I'm hypnotized, and at times I have to give my mouse to my wife to have her lock it up in the wall safe. So go ahead, buddy. So, all right. So you started applying what you knew as a computer guy, mathematician. Everything's math, and you gravitated towards supply demand zones. Did you have a mentor that steered you in that direction, or a book, or it was natural, self-taught?
Well, you know what? It's I was one of probably the few fortunate people. I mean, due to my work with the banks, I was introduced to some institutional traders, and a lot of these guys were talking about very specific things. They were talking about liquidity, which I did not understand initially, and they were talking about the strength of an economy, the strength. I was like, what do you mean the strength of the economy? And they said, well, if the key figures out of Japan are good, this is good for the yen. And I said, okay. So I kind of converted that to currency strength. And so I started to do a lot of searching for for this term liquidity a lot, and this guy popped up. He kept popping up, and so I wrote to this guy, and I went to one of his workshops back in maybe 2012.
Who's the guy?
The guy is Chris Laurie.
Okay, I've interviewed Chris. Yeah, Chris is. Yeah, he's a champion.
He is. He's the real deal. And so Chris and I became good friends, and he took me under his wing and showed me the ins and outs of the liquidity distribution, which I had a lot of insight into due to my work. Mm-hmm. And yeah, and so I kind of spent a lot of time, met up with Chris quite a few times, and participated like his workshop in 2012, and that was really good. It's like a pretty intensive 3-4 days, and I learned a lot.
Yeah, I bet part of it was concentrating on Aussie yen for risk.
It was the carry.
Yeah. Okay. Go ahead.
Yeah. So that was really good. So luckily, my attention was immediately taken away from indicators and brought to liquidity, and I took what Chris was telling me about, and I used that to kind of focus on different things when I was looking at writing software. So I said, okay, liquidity. What is liquidity? Well, liquidity is
where the orders are.
Exactly. A liquidity is how quickly something can be buy or sold at any given time. And I said, well, how can you see liquidity on a price chart? So I started to study price charts quite extensively. As a matter of fact, I took the jump of faith about 3.5 years ago, where I decided to quit my job so that I could study more intensely. So I quit my job, which I don't recommend doing. We almost lost our home, but we managed to fix it. But I must say that in that period of time where I was able to study the charts for 10 hours a day, I mean, unbelievable insights came to me as a result of looking at the charts for such a long time, for so many hours. And so I started to, when I was doing this, looking at the charts, I was, of course, my primary purpose was to write software, and I'd start to see these price imbalances, these liquidity voids, and I thought to myself, well, how can I identify these using software? And so I found an algorithm that I wrote, and I started to slowly but surely build on this piece of trading software, which initially was called the Price Action Pro, and then now it's just called the Supply and Demand Indicator or tool, and it focuses on finding these kind of release points. And so you have, price cannot move up and it can't move down because of filled orders. It's only moving, my optic and what I've seen while working at the banks, due to unfilled orders. And so price will typically move in a direction of thinnest liquidity, and it'll stop when it bumps into these pools of liquidity, which are typically, as an example, limit orders or stop orders at the opposing sides of the market. And so when stop orders are hit, they dump liquidity into the market, and this liquidity is typically bought up by the people who are in the know, and this drives the market in the opposite direction, which is why the whole concept of I think there's a term like stop running a lot of people refer to in the markets. It makes perfect sense, and it's not because.
Do you know my Twitter handle?
I do, actually. I do. Exactly.
So I think I know what you're talking about now. Today it's done by algos and black boxes, HFT, but when I was on the floor and there was open outcry, it was actually audible. And you're right, people would drive the market. They'd be long going into buy stops, and when buy stops were elected, that was a liquidity for them to get out of their longs and even reverse. So yeah, exactly. It still happens. It will never stop happening.
That's right, and it's not the broker that's against the customer, the retail trader. It's just the market moving, breathing, and so it has to happen. Price has to find liquidity in order to move, and so that's ultimately what's happening when people's stop gets hit. That's why you'll see price often kind of push through a significant high or a low, and this is done because there are typically stops there, and this will cause dump the liquidity in the market, And then this is kind of gathered up by the opposing side of the market, which drives price towards their targets.
So I see on the bottom you have your is a hypnotic currency strength histogram. So tell us how you use it.
Well, I use this pretty much for divergence purposes, where you can, I mean, this is just showing me the difference in the strength between the Swiss franc and the Japanese yen. Mm-hmm. And so you can see that when we had this high here, we had kind of like a nice push. So we had demand for the franc and supply of the Japanese yen. So price came up here. So we formed this high, and then we had a really strong push up into this. You can see this orange area, which is weekly supply.
But you had a smaller reading on the histogram. So was that
exactly.
a divergence to you?
Yeah, so that's a divergence. And so when this happens, I mean, you don't just take every divergence trade. You have to be taking divergence trades if that's what you trade. If price is reacting on something, just trading, I think, in the middle of black space or white space is not such a good idea. And so, I mean, this is just confirmation that there's a high likelihood, the probability that price will have a bit of a bounce here. And it did, and we had a really nice release. And then we have these lows here. People are probably going to have their lows their stops close to these lows here. Price challenged those lows, and price started to drift a little bit higher. And so, I mean, I look at this strength to me as a secondary tool. I use it for divergence. Also, if I'm trading on a smaller time frame, then I'll go to, for example, a monthly chart or a weekly chart, which I spend a lot of time on, and then I'll look for kind of trends going on these time frames, and then I'll take this information with me down to the smaller time frames where I'm going to typically be placing orders.
Okay, you have a lot of horizontal lines here. So how do you know which are they different time frames, and how do you know which ones are going to be significant if you have so many of them?
Yeah, well, let me clean it up a little bit. There are kind of a lot going on there. Let me. Okay, so I mean, this is just showing the supply and demand areas on the weekly chart, and we have dotted ones here, and these are areas that have been visited. The first visit happened here. This is a second visit. This is a high probability short. This is a lower probability. And supply and demand kind of also goes a little bit against support and resistance, where if price comes up to a level and tests it multiple times, it doesn't mean it's stronger. According to supply and demand liquidity, it means that it's getting weaker because the pools of liquidity at that level are diminishing each time price penetrates an area. And so each time price comes up to this area, I want to know if price has been there before. It almost came there here. We got to there here, and we came here. And so each following time, the next time I probably will not consider to trade this. Ultimately, you want to see price enter an area and retrace aggressively, which shows us that there was indeed bearish liquidity here. So if price is coming, let's go to a different time frame. Let's go to the pound. So price is doing, actually the euro, there's something I wanted to show on the euro here quickly. Okay, so if price kind of comes down to an area like this, and it's been tested, and then the indicator drew this little rectangle just here. And this is important because price came down, we had a really strong push here, and then price for several hours sat on this area. And what's going on there? Well, this is the accumulation of orders to move price lower. And you know this once price leaves, and the indicator told me this, said, yes, we have a 4-hour area of supply at this area. And so this is the trade that was taken at this area here.
Okay.
And so
now let's not go backwards. Let's continue. So here we are now with a potential double, triple bottom, getting a reversal candle. How do you play a move like this? What would be your expectations for a move in euro now?
Well, if I look at this, you can see that we've been down to this level here before. And so first of all, I'll mark off the lowest retracement, which is here. And so once price moves back to this level here, and if we're not trending, when price starts to move against and move towards this, I don't want to be buying until price comes to at least beyond the lows of this, because price has already cleared out liquidity at this level. Price turned, it went down, and it turned from here and started to move higher. So the buy zone starts here. And if you look here, you can see we have some micro 4-hour areas here. Price tested the edge of it nicely, and it held the second test as well. So price is reacting. So we'll probably get, depending on what happens here, if price continues to accumulate around this area here, I'll be very hesitant to buy, because this would make me believe the price is going to have another push lower.
What would make you believe that?
Just like the behavior of price. If price is stuck around this area here and we get these small bodied candles at a key level, yeah, I would be very hesitant in, for example, buying. So I want to wait and see what happens.
You have more of a bias to sell it on strength, and what pivots would be important to you?
Let me clear the charts off a little bit, and I'll just do like an analysis.
I mean, yeah, I hope you don't mind, but
not at all.
It's easy, this happened then, and then that happened, and then this happened. Well, what's happening now, man? In this business, you're only as good as your last call.
Exactly. I'm going to show you. This is what I'll do. I'll start on the monthly chart as far up as I can get, and I'm going to look and I'm going to see what's going to happen. You can see, first of all, I asked myself.
What are we looking at?
This is the euro, dollar, and this is the monthly chart.
Okay.
So I'm asking myself, what's driving price? And so you have to identify the most recent area of supply on demand that the price has reacted at. And you can see, you can't see it here, but we have a micro area of demand down here. And I can see this because just the way these wicks look here. And if you have a look, and I'm going to zoom in. And if you have a look here, you can see that we had an area of demand, price released, it went up, it came down. And so this is a pullback. And what does a pullback mean? Well, to me, a pullback means that we're flushing liquidity. And so if price manages to come all the way back down here, then I don't want to be paying a price any more expensive than the low of this pullback. This is a nice, strong push higher. This is a less strong, we have a pullback. This is telling me the edge of the buy zone begins at the low of this candle. So if we go back to current price.
Currently?
Currently, yeah.
Okay.
And so this is what price is reacting on now. So we can. So
what is that level?
That's it's difficult to see on the screen. The 1, 0. I'm just going to go. I can't see, my screen resolution is pretty high. Okay, it's the 0, 3, 60.
Oh, the lows.
Yeah, that's the lows.
Yeah.
Okay, so that's what.
So you're saying there's support at the lows.
Exactly.
So do you think we're going to attack that support, or do you think that was a bottom?
Well, let me finish my my analysis here. So price is reacting here, and then I'm looking at what price did when it went through there. You can see that price had a test here, and then it moved away. And so I want to have a look at this leg high here. So this is the origin of this move. So I want to have a look at this. And I'm going to have a look at the move up here. So you can see that we have the origin, which is down here. And this is the origin because, price went up and we tested it a couple of times. This is not a very impressive move. Price didn't leave from the area very quickly. So I would expect price to come down through this area and retest the absolute lows that we can see here. But for the time being, you can see we had market structure, which I can draw here, can't I? Pen. I'm just going to draw here. So I'm going to try and draw these swings. They're not very clear. So we go up and down and up and down. And so if I want to draw a defined market structure, the structure of price, I'm going to take the clearest swing points like so. And we have one here and we have one here. So I'll remove these. Oops. And now I'm going to take a trend line. I'm going to draw it from here to here. roughly. Not a perfect science like that. And then price went up. And so we had price managed to break the structure of market. And so you have to ask yourself, well, what area of supply caused market structure to fail? It's this one did here. So this is the area here that is interesting to me initially. And so we have this area of weekly supply that's driving price. So this is big. I mean, weekly supply is big. It's a really strong move. When price left here, we managed to move through. First of all, we have this is nice fresh demand. So I'm expecting price to come down to the 114.40-ish area. We'll have a bounce, but keep in mind that just below we have this one here. So we have a couple of, let me remove the rectangles. So I have to do the work myself. Goody. We have another one here. Good. And so price went up. We're approaching this one here. I like this one here, but it's not too clear. So I'm going to go to the smaller time frame. I'm going to have a quick look there and see what's going on. And you can see here that within here.
So you're always looking left.
Yes.
Okay.
And so if you look here we had that pullback. We had a strong move and we had price coming back. What does that mean? Well, to me, that means I'm not going to pay a price any more expensive than the, I can't see. I'll tell you what, you get over 40, your eyes start to fall to pieces. Let's see, the 112.94. So that's an area that I would be very interested in buying. So that's my low there, just down here, around the 11300 area.
Okay.
Close enough. And this is interesting because we have this little area here. And this one is a little bit messy because if you focus on supply and demand, you have to know that if price is moving sideways like this, well, that means that there's a balance in supply and demand. And that's what you don't want to see. You want to see an imbalance. You want to see price rally, accumulate, and then leave quickly. You want to see very, very quick approaches and very quick departures. If price is hanging around in the area like it is here, then I'm going to feel much more inclined to look lower, which is why I didn't draw this area off. I drew this one here. And so you can see the price, let me zoom in, it's not very clear maybe. So price, we left here, we went higher, we came down, we tested it, we came up. You see there's a lot of agreement in the price of the Euro USD at this level here. So price is pretty busy accumulating. Price pops up, but we have this here. So we had price that came back to this area. Oh, damn it, my eyes. Could change its color, which is the one. Okay, buddy. 110.50.
Why don't we do this? Now's a good time to show your website. I went to your site, nice looking site, and what you have to offer to people and how they get in touch with you, Sarid.
Mm-hmm. That's totally fine. Let me before I do that, I just want to show you.
Make you a nice little commercial.
Yeah, good. Before I do that, I just want to show you some results.
Oh, okay.
This is over the past. What account is this? The 88. This is the past 1.5 months of trading. Got quite a few accounts. I shan't spend too much time, but I like you said, Dale, you like to scale into positions. This is something I'm doing more and more because ultimately I like to get a better and better price for whatever I'm trying to buy. And so you kind of drop in a slice of an order. You see how it goes. If price keeps moving against you, then ultimately you want to try and get in at a better price. Okay, and so so this is what I really try to do. And you can do if you trade supply and demand, and you spend, of course, your time on the major time frames, so you know what is driving price, which is absolutely crucial, which is ultimately the economic data, so the interest rate swaps, swap differentials and stuff like that. And you do your analysis, you find out, okay, we know that on the weekly chart we should be buying. You take that information with you down to the hourly chart or the 4-hour chart, whatever chart is that you want to trade on or you're trading on, and you have a bias. And this bias is ultimately what is going to enable you to get much better results.
Okay.
So you can you can see here, I mean, this is the past just under 500 trades, and we have a hit rate of 99.4% on the shorts and 80% on the longs. So we have a high degree of accuracy here. We have another account here, 326. As a matter of fact, this algorithm, or not this algorithm, but this method of trading is something that I've attempted to automate. And so I have a robot running on a small account. I'm just going to show the results. This is a small live account. And here we have the past 3 weeks of trading. It's 100% automated, a tremendous profit factor, 10% within the past almost 3 weeks. We have a really good hit rate on our trades here. We have very small drawdown, under a percent so far. And so the whole way of identifying these key areas in supply and demand can be done, of course, using code, which is what I've done. And the software that I write is exactly what everything is based on. So the engine comes from discretionary tools that I showed earlier on, and this is the website where I operate. So if you're interested, you can come here and you can have a look around. We do a lot of I write a lot of blog posts about various things, typically supply and demand and currency strength, but I also have my algo trading projects, video blogs and stuff like that in here as well. So it's a pretty exciting environment. I mean, at heart, I am a programmer, and I think the financial markets are a splendid way to kind of express that creatively. And I think it's a very fun travel. It's a very fun trip.
Yeah, outstanding trading, Sarid. So what do? You sell a copy of the robot for people to trade? What's your business model?
No, it's like a monthly subscription for the software. Yeah, and so we have,
got it.
Yeah, and that's it. So you mean the currency strength tools and the supply and demand tools. The robot is not, I'm not, liability issues and stuff like that.
Yeah. Oh yeah, you're not, okay, I understand. Yeah. I mean, even the robot in Lost in Space broke down on Will Robinson and Dr. Smith, and I'm sure you don't remember the television show, but that's the only robot I really cared for. So anyway, it was great meeting you, buddy, and congratulations on finding your way into trading by accident.
Yeah,
all the good things in life are accidents, aren't they?
That's right. As a matter of fact, as you might recall from our correspondence, we're in the process of moving to Indonesia. Currently, I live in Copenhagen in Denmark, and I'm gutted that it's 1-1 Aussie Denmark.
All right.
Yeah. So I mean, if you manage to harness the beast, tame the beast, then you can do whatever you want. Exactly. Yeah. And we're moving to Indonesia in about 3 weeks, so we're all dying of stress at home. The island of Bali. There's a school there. Yeah, there's a school there. Check it out. There's a school there called the Green School, and this school is very much focused on sustainability, all the way from the kindergarten class and all the way up to the 18-year-olds at high school. It's a phenomenal school, and it's situated in the middle of the jungle in Bali. It's completely phenomenal. So we went there. We spent the winter there last year. We visited the school, and we said,
fell in love.
Yeah, we were a bit like, we have to get our kids into this school. So we started to fill out the paperwork, and the sun shone on us, and so we're selling everything we own, and we're heading out in 3 weeks. So
there's a trader, not risk averse, and leave your comfort zone.
Oh, absolutely.
So living the dream, Sarid Harper. Get in touch with him at Pipnotic on Twitter, and check out his website. And very nice to meet you, buddy. You're now my trading warrior brother.
My pleasure, Dale. Thanks so much for having me.
All right. Enjoyed it. Thank you so much. And may your program and people that use it and your tools, may pips rain down on them as they do, and you and your family in the jungle.
Thanks so much.
All right, buddy. All right, everyone. Thank you again. And everyone, that's a wrap. I'll see you for TGIF. And remember, don't just count your pips, count your blessings. See everyone tomorrow. Thank you again, Sarid.
Thanks so much for having me. Thanks.
Adios.
Cheerio.